Hello, everybody, and welcome to the 100-Year Real Estate Investor. We are your hosts, Jake and Gino, and this is the show dedicated to long-term personal financial engineering. Gino, how's it going?
Doing good, Jake. How you doing?
Always making it happen. And for everybody out there listening in podcast land, you may want to check this out on YouTube as well, because we have an amazing prezo going side by side today. It's going to be phenomenal. We got all the Skittles colors, and it's going to make you feel really good about yourself. Gino, today we have an expert who specializes in the dual asset strategy. Her journey into whole life has allowed her to spend the last decade helping entrepreneurs take advantage of this amazing strategy. So without further ado, Kristin Colca, welcome to the show.
Thank you, Jake. It's my honor to be here.
Hey, it is our pleasure to have you, as we like to say in Rand/Chick-fil-A land. Now, you have a very interesting story because you had a very reliable job in banking, yet you decided to pivot to your current profession. Please unpack that a little bit for us and why.
Yeah, absolutely. So, my early 20s, I think a lot of people can probably relate to this, but I spent a lot of time bouncing around and figuring out what I wanted to do with my life. I started and stopped higher education a couple of times. And I got a great job at a bank and found out that I really loved working with money. So I said, okay, this is my path. Yeah, a lot of people, you'd be surprised. So, I said, this is my path. I'm going to go back to school. I'm going to get my finance degree. And I did. And at that time, I realized I really needed more flexibility than what I was getting at the bank. I had a young daughter, a single mom, and I actually met Teresa Kuhn on Craigslist of all places. And she offered me a job with her financial advisor.
Now we're going from the bank to scary Craigslist land. So I think we're going to start losing people. You're going from financial stability, which we hope, right? It could be a house of cards, to Craigslist. So you're gonna have to help me out here.
Yeah. Well, I was looking for something, like I said, with more flexibility, something where I could really set my own hours so I could deal with school and my daughter and working and paying bills, right? So I met Teresa and she offered me a fantastic position with her financial advisory firm, just doing back-end planning, putting together proposals, customer service, admin work, things like that. So I said, okay, this is perfect. But my path, I never thought included sales. My personality, I'm the type of person where I like to be kind of by myself, dug into my computer, analyzing the numbers and figuring things out. But over the years working with Teresa and finishing my degree, I had the chance to talk to her clients. And I found over and over again that the people that I was talking to, they were so happy with their policies. They were so happy with what they were able to accomplish with their policies, and that it did exactly what she said it was going to do for them.
What was it though? Why, because you have people and it's there's always that fear on the front end when you're buying something, like, is this the right choice? And then
Right.
it's the best feeling in the world after the fact when you know the service is there and you know the experience is there. That's why I keep going back to Chick-fil-A. 2 mentions on the show. I'm not getting paid for it. I'm just saying maybe I should be. But that's what we want. We want that experience. So unravel that a little bit for us. What was it after the fact that made people keep coming back and that they really enjoyed that experience?
Yeah, I think it was the fact that a lot of people were just so used to the ups and downs of the stock market, not being able to predict where their money was going to be the next day or the next year or 20 years from today, and wanting the ability to have more control over their cash and use their cash for the things and the opportunities that they came across. And really, getting to the point where they felt like they can predict and count on the money that they had inside their policy.
All right, Kristin. So let's unpack the benefits of using your whole life policy.
Yeah, absolutely. So Jake, I think a lot of people in your community understand that you can use whole life insurance to invest in real estate and really benefit from the dual asset strategy. But there's a lot of benefits that you can get from using whole life that go way beyond real estate and way beyond investing and using the cash value to build that real estate portfolio. And understanding these benefits, I think, can really help people when it comes to managing their policies and managing what they can get and expect to get out of their policies.
Almost a so like personal financial planning, essentially.
Right, exactly. Yeah, I think you guys call it personal financial engineering.
Yes.
For smart people.
Yes.
And Kristen, I like to say also, I've been doing a lot of research. I've been doing a lot of, study on the topic. And when we talk about whole life, it's really for your whole life. That's the big distinction between whole life and term. They're both life insurance, but term life is really death insurance. It doesn't come about unless you die. Whole life is for your entire life. And that's what it's all about with the 100-year real estate mindset. We really are planning for our whole lives, and then for our estates, and then for our kids, our grandkids, our legacy. So that's why for me, the last couple of years, I've really shifted my mindset to this whole life, product, because I love it. I love what it does while I'm living. I am building a cash value, and I also have that death benefit, those two things. And if I'm going to play in the stock market, I'm going to go invest my money in the stock market. I love these types of policies because, like you said, the money is there. It's stable. I can access it whenever I want. And it's something where I'm doing a real estate deal, or if I want to buy crypto, I can take from my policy and invest it into there. So that's what I love about these policies. It's just not, it's just all about your whole life.
You're investing and not renting. So basically, with a term
Exactly.
policy, you're renting, and they're smart. Okay, they know that they're probably not going to have to pay these things out, the majority of them. Okay, so you're turning money over that you're never going to see anything from it. At least here with an investment whole life policy, there's going to be a benefit at the end of that rainbow, and that's important to me because I don't want to just light money on fire if I don't have to.
Love that. Can we go over some of these benefits?
Yeah, absolutely. So Gino, I know that a lot of your students have a CapX account for their capital expenditures, and most of the times it's in a savings account, right? Because it's liquid, it's accessible, it's easy to get to if you need it. But it's really not doing a whole lot for them in that savings account while they're waiting to spend it. So this is a great alternative to that CapX account. It can be used to self-finance big ticket purchases like cars, boats, RVs, vacations, anything really that you go to the bank for financing for or put on a credit card.
But Kristen, we want to take one asset and turn it to another asset. We don't want to do an asset and then take it into a liability here. No, I'm just kidding. It's fine. Look, there's nothing wrong with buying a boat, folks. Okay, I'm being a smart ass.
Well, no, and when we get into it, a lot of our clients will actually flip RVs and flip cars.
There you go.
So yeah, they're creating dual assets there as well.
That's awesome.
Yeah, they can use it for college funding for their kids, or if they have student loan debt, maybe paying that debt off quicker. When it comes to retirement planning, and I know a lot of the members of this community, they're not traditional when they think about retirement, right? It's not about quitting your 9 to 5 and sitting on your couch all day. It's about that financial freedom. So this can give you the opportunity to create a tax-free stream of income when you do get to that point where you need that extra money. Maybe you're scaling down, not necessarily stopping working or retiring, but getting to the point where you're wanting to have financial freedom in your life. The death benefit's also a great benefit, right? Because not only can you use it for estate planning and to leave a legacy behind for your family, but you can also access that death benefit if you have a medical emergency and have some cash, some income cash that you can use for those medical expenses.
And we did a podcast with an estate planning attorney, Linus Sugis. So for everybody out there, go back into the playlist and listen to that on YouTube on the Jake and Gino channel, because it was a powerful podcast, because we're discussing, even if the current administration does nothing, estate planning is going to dramatically change. In the year 2025, we're going to revert back to the Obama era of the $5 million, lifetime exemption. Right now, I think it's 11.7 million. If nothing happens, it's going to drop, and the estate tax rate is going up to 45%. So this is how you are proactive as a 100-year real estate investor. Proper planning prevents poor performance. So this is the time where you have to start thinking, what do I need to do with my estate? Because as you can see, rampant inflation going on. Jake knows, and Gino knows, and Jake and Gino's community knows, asset price is going to continue to elevate. So if you've got a $3 or $4 million net worth today, guess what? In about 5 years, if you can continue to hold those assets and buy those assets, you're going to eclipse that $5 million number. So start planning today about what's going to happen with your estate in the future.
Yeah,
Right.
and I just think it's the way we live our lives too, and everybody in this community is that look, we're people out there that are making a difference, we're making an impact, and when you live your life a certain way, but you don't properly plan for the future, the last thing you want is your kids, your daughter, your son someday saying, why did mom or why did dad, live their life in a certain way and create all this, but then they didn't do the little extra to ensure that this stuff lived on beyond them. And it's not hard, right? It's just taking the time, educating yourself and understanding this, because what do we know that's on the chopping block right now? We know that step up and basis may go away. Look, we don't know, but this is all the stuff that's proposed. This is the administration's words, not mine. Okay, we know that capital gains may double. Okay, Gino talked about the estate tax. So these are all things that are going to have a devastating effect on generational wealth. They're also talking about, taking away the 1031 exchange. One of these things in my mind is, big time news that is really not getting enough attention. And I'm shocked because the devastating effects on everything that, we all do day in and day out to create a life of abundance for ourselves and our families is, is basically on the chopping block. And you got to be prepared. One great way to do it is to utilize these policies, utilize the dual asset strategy, and then have that death benefit waiting in the background. So if there is a huge capital gains tax for illiquid assets that you may own, like real estate, that death benefit can then come in and bridge the gap. So
Joseph,
that's how I'm using it. And yeah,
you hit the nail on the head right there, because I don't want to pass away and then have a fire sale, because I can have a huge net
how
worth.
sad is that though? You
but I'm
worked
in
your
liquid.
ass off your entire life, and then
Yes.
that's what it creates.
Yes,
So,
and then all of a sudden, my kids have to say, "Well, I'm getting these assets, and I have to pay this tax, so I'm going to be the mom and pop that's selling these assets." Do you want to be in that situation? Do you want to be in that
and
position?
destroying a company that took 30, 40 years to build.
Yes,
So,
exactly.
yeah.
Get in on the front end of this right now.
Yes.
I don't want that to happen. That's what I'm doing. That's what Jake and I are doing. We're structuring our estates and our planning so that will not happen. Because, like I said, we want to leave the legacy. But it's already stressful enough that they're going to lose their dad, and then all of a sudden they have to worry about selling assets that maybe most of them have never been in the business. They don't know what they're doing with real estate, so they're going to hand it off to a broker. They're probably going to get ripped off. They're probably going to have to sell at a discount. And then what's left? My legacy is totally gone. So plan for your legacy. Start planning for your legacy today.
Well, and here's the thing too. We want it's like the Thomas Jefferson thing. We want to be able to, do our best. So if our kids are not the same as us, because while I would love my kids to be in the business, they're very young right now. They may not want to have anything to do with real estate. Mm-hmm. But I want to systematize and create a business in the future that's not dependent on me, that can carry through, that they can still have ownership in, but they might not be driving the ship if they're not interested in that. Because maybe they want to be into art. Maybe they want to be into, something else. So this gives them the flexibility to carry that asset on and, continue to own it without, to Gino's point, having to do the fire sale. So, right. Sorry for the passion. It's just something that it's real, and it's something you have to address. And if you're, 100% responsible for everything that comes into your life, these are the conversations that you have. So.
Absolutely.
All right. What's next?
All right, so we can dive a little bit deeper into this alternative to a CapX account, or really just an alternative to a traditional savings account. So why is whole life better than that, right? Well, whole life insurance, number one, the long-term returns that you're going to get on your cash value is much more competitive than a savings account. Interest rates today are pathetic, and really not even keeping up with inflation. So this is a vehicle where you can get a better return on your cash.
I think the latest inflation was 5%, and if you're getting 1% in, your bank, you're getting creamed pretty hard there.
And interest rates aren't going anywhere as far as banks giving out money. They're going to stay sub 1%. And to that, this is an entire great cash management tool where there's over $17 trillion in bank accounts sitting around right now. And it's an amazing thing. Think about that, $17 trillion earning 0.3%. It's amazing. So when you're out there, utilize this as that cash management tool.
Yeah. Banks love that. Banks love that there's $17 trillion sitting there that they can turn into, an infinite amount of money, right?
Mm-hmm.
The other great benefit that you're getting here is, with a savings account or CD, money market, savings vehicle, when you receive interest, you're paying taxes on that interest each year, right? Mm-hmm. So that's further diluting your return. With the whole life policy, you're not having to pay taxes on your gains. And then as
Very
far
nice.
as comparing it to, using a savings account for your capital expenditures, well, you have the same accessibility, the same access to your cash when you need it. You can borrow against your cash value, use that money to, pay for that expenditure, and you continue to grow that money that you're using at the same time. You're
Mhm.
not missing out on the interest and dividends inside the policy.
Mhm.
And
Love
you have
that.
a policy.
Yeah, and the death benefit. Yep.
Yeah.
Mhm.
Wonderful.
So moving on and kind of building on that idea of using the policy to self-finance, the things that you can use your cash value to finance are really endless. A lot of our clients are using these policies to finance cars, boats, RVs, going on vacation, purchasing a vacation home. So really, the possibilities are endless. And you have total control over that loan, right? So if something happens, if you have financial difficulty, if you're not able to make that loan payment, you can stop that payment, your classic car, or, let you know that you're going to go into. So if you run into financial difficulty, the insurance company is not going to come after you to try to repossess your car or send you to collections.
Love that. And I've been doing a lot of research on people who are wealthy. And when I look back, Jake likes this boy, Ray Kroc. We always talk about Ray Kroc. And how did he start McDonald's? He started McDonald's by borrowing from his whole life. Mr. Ears, Mr. Walt Disney, same kind of thing. No one thought he was crazy enough. You're going to do what? He couldn't get money to start his vision. He borrowed from his whole life. And when you look at it, something called BOLI, bank-owned life insurance, there is a ton of whole life insurance that is owned by banks. Why? Because it is called Tier 1 capital. It is amazing. And then we have COLI, corporate owned life insurance. So when you're studying people who are wealthy, success leaves clues. And you have to ask yourself, why are all of these people utilizing this tool? Because it's an amazing tool to use for the wealthy.
Right. And, we were talking yesterday about Bank of America with
Yes.
$20 billion of life insurance assets on their balance sheet.
And how much did they have in stocks? They had, what was it, 3 billion or something minuscule? And this
It was
is 20.
a lot less.
This was 2015. So we're just making the point that there's certain buckets that you want to fill. And as a person who's wealthy, they're filling that whole life insurance bucket. Why are they doing it? Because they're seeing all these different benefits. If you can control the flow of money, that's what wealthy individuals do. That's what wealthy investors do. We want to control the flow of funds. So if you're being your own source of financing and you're able to, extract that money for opportunities, that's what we want to do as a wealthy investor.
Right. And positioning your cash reserves so that when you have an opportunity, you're ready to deploy that cash.
Mm-hmm. Absolutely.
So next one here, college funding and student loan debt. This is one that I'm pretty passionate about. I really dived into how to use policies for college planning when my daughter was in high school and getting ready to go to school.
Mm-hmm.
So the cash value inside your policy does not count against any kind of financial aid, scholarships, or grants that your child can qualify for. There's also no restrictions on how you can use the money, right?
Mm-hmm.
So, Jake, if your child decides to be an artist and doesn't want to go the traditional route and go to school, maybe she wants to go to Italy and study art in Italy, that 529 is going to say, there's some restrictions on what you can use this money for, right?
Yeah, I see these guys out there now who just started art and they're getting like $500,000 a piece for their painting. So I was like, hey, maybe it's a good route for my kids. I don't know.
If you're Hunter Biden.
Yeah.
I wasn't naming any names.
But yeah, it gives you a lot more options. Again, with this policy really adds to your life is options.
Mm-hmm.
You have different options where if you're not taking a certain traditional route, you still have the cash that you can access and you're not being penalized for using it the way that you want to use it, right?
Mm-hmm. Yep.
Teresa Kuhn, her son took a very non-traditional route, right? He didn't go to college. He said, I want to do business. I want to be an entrepreneur. And Teresa had the foresight to say, well, you don't study business, you do business, right? And so they started an HVAC company for their son, and they were able to use his policy to help finance that business. And that business today is doing amazing. I've got to see that grow over the past 5-6 years. It's been amazing.
And I can be a testament to this as well. I just took out policies on all 6 of my children. And what I love about it is I have the control. I am the beneficiary right now. And as they get to the age where I think they're not going to go study art in Italy and they're responsible adults, I can say, here's the policy. Papa Gino's going to give you the policy, and I'm going to be paying into the policy for the next 10 years. It will be building cash value. So the next 10 years, let's say my daughter is 11 years old and she's 21, she may have a sizable cash value there. If I think she's really responsible and she wants to go buy a home, or if she does want to go to college, I can take the money out of the policy there. But the flexibility that I have there and the ability that I can get a death benefit on them, because something may happen in the future where they may not qualify for life insurance because of their health. Let's say something happens, I'm at least locking it in at a younger age, and it's a lot cheaper to get it when they're this young. So for me, I thought this is great. This is going to give them the flexibility, and also gives them the mindset, because I want them to think of these policies as a business. So each one of my kids has a policy, so it is a business for each one of them. And as they get older, I want them to put money in these policies. I don't want them to save for retirement, because a 401k is a terrible plan for retirement. Because let's say you retire at 68 years old and you have $2 million in your 401k. You don't have $2 million. You need to pull that money out, and you're going to get hammered with taxes. So people never think of the foresight going forward. So if you're planning and you're starting at a young age and starting to, create these policies, it's an amazing vehicle for you to save for your retirement as well.
Absolutely. Absolutely. I don't have a 401k. I have a policy, and that's my retirement savings. And along the way, if there's something that I want to use that money for or need to use that money for, it's not locked up. It's accessible to me.
Kristin, Jake, and I had a 401k. You know what we did to it?
Did you cash it out?
Best thing we ever did. We bought a deal, and that deal is just printing money right now. I'm not saying everybody should do it, but with cost segregation and with the opportunity. Now, if I had had a whole life policy to borrow from, I would have had the dual asset, because I still have had the policy. That policy loan would have been paid back 30 times over. Think about that, Jake. That would have been amazing. That would have been nirvana if we'd known this 5 years ago, because we would have had that policy. We would have borrowed from it to buy the Hammond, and then the Hammond printing money pays the policy back, and you have both of them. Instead, we went the traditional route, and we had our 401ks, and we had to blow them up. We had to pay fees for them, but that's okay, because it was the best thing that we could have ever done. But if we were educated and we understood and knew about the dual asset strategy, right now we'd have had 2 assets instead of 1.
2 words: jailbreak. That's what we got out of the 401k. It was like breaking out of jail. I'm serious. Like, you want to talk about feeling like you have handcuffs? Like, oh my goodness, it felt so good getting out of that thing.
Yeah.
Yeah. And in terms of using the policies for college planning, it's not just about your kids. If you have student loan debt, you can use the policy's cash value to reposition that debt in a more efficient way. And that goes beyond student loans. If you have credit card debt or a high interest loan that you're trying to pay off, this can be a really efficient way to reposition that debt as well.
I want to speak to the young people for a second, because I vividly remember I was in Poughkeepsie at the time, sitting in my apartment, and this is when these people were signing me up for like the 401ks and everything. And always, very hard worker, with a desire to succeed, be successful, a path driven for the future. And I just remember saying, like, is this it? What I'm like, okay, I'm looking at these people that have been successful, and I'm like, the only option that I'm getting presented in mainstream society is the 401k. I know I need to invest to grow wealth in the future. I'm like, how do you actually create value? How do you make money in this world when the only option I'm getting is this 401k? I guess I better take it. So if there's anyone out there that's younger, that's listening to this right now, there are more options out there. This is not the only option for you to create wealth. And if you're asking me personally, I think it's one of the most inefficient options for you to, and I'm talking specifically about the 401k, for you to grow wealth and create a life of abundance and freedom for yourself. So caution, do your research. Don't stop investigating on the 401k.
And Jake, it's important. We discuss it in our Personal Finance Academy videos. There's 3 things you want as an investor. You want leverage, you want liquidity, and you want control. That's what you're looking for as an investor. Do you get any one of those in a 401k? Well, you got to wait till you're 59.
You go to financial jail, and then you get punished for leaving.
Exactly. Then once you leave,
you get a life sentence, and you get punished for leaving. They cut off your toe.
Exactly. That's what the disappointing thing is with the 401k. They've shifted the burden onto us to be able to plan to retire. They want all this money to funnel into the stock market, so they create these 401ks. And there's really, the benefits to us are really not. There's not many things you can do with a 401k to invest in. There's no leverageability really of it there, and it's not liquid. So there's so many benefits of not having one. And that's why when I started my whole life policy years and years ago, I actually started transferring the funds that I was putting into a 401k into my whole life. So that's one thing. People are probably scrambling saying, I don't have any money. I don't have any savings. There are so many different ways you can find money to start funding a whole life policy.
But Jake, the 401k, it's right there. I understand it. I can just go buy it retail off the shelf. All this other stuff seems hard. You know what? It's supposed to be. Okay.
Mm-hmm.
And that's why there's a 1% and a 99%. Okay. And this option that we're looking at right now is actually one of the easier ways to grow your wealth without getting stuck in that financial jail. Okay.
Mm-hmm.
So this is a beautiful bridge next step for folks that are looking to get out of that rat race, kind of corporate circle where the only option that's presented to them is the 401k or the 529. Those are not vehicles that are going to take you anywhere. I'm sorry.
Mm-hmm.
Right. And, we talked about taxes earlier with estate planning. Think about taxes with the 401k. One of the big benefits that they push is tax deferral, right?
Mm-hmm.
You can deduct the money that you put into your 401k today. Well, who does that help? Does that help you or does that help the IRS?
Mm-hmm.
The IRS is looking at this chunk of change that you're building and building and building and building over time, and they're seeing dollar signs on that, right?
Mm-hmm.
They're saying, ooh, I get to get taxes on that big entire pie instead of just a little piece of it, right?
And now they're saying we're going to double the taxes on that pie. Now they're really drooling. Okay, now they got like Gino over there baking them up a little bit of Gino Trattoria over there, and they're saying we're coming for it. We smell it.
Yeah.
Think about that though. Like gang, taxes are not going down in the future. Okay.
No, look at the spending we did last year.
Yeah, I mean, all of these, things that these proposals, if one of them is approved, it's devastating. So, and they're just going to keep creeping for more. They just keep printing money and they have no way to fund it. So they have to go up. Okay. It's literally that simple. Or, the country's going to be in big trouble. So,
yeah. Yeah. And, building on that too, another great benefit of this policy is that, when you take income from your 401k, you're paying taxes on that entire withdrawal, right?
Mm-hmm.
When you take income from your policy, it's a tax-free stream of income. So, you can enjoy tax-free income from your policy in retirement. You don't have to worry about where tax rates are in the future. You don't really have to plan around that, right? A lot of people really have to look at what they're taking and from where to stay inside a certain tax bracket.
That is huge. Say that again. That's very, very important, what you just said right there.
Yep. Yeah. I mean, my dad's even doing it. He's retired now, and he's very careful about how much he takes from what asset because he wants to stay in a certain tax bracket. Imagine not even caring about that.
Talk about a scarcity mindset. Like you're literally afraid to make money because you're going to be punished.
Yeah.
Is that how you want to be living your life? I don't think so.
All right. So the last two benefits that we're going to talk about today have to do with the death benefit. And a lot of people think about the death benefit as just a benefit that your family gets or your beneficiary gets when you pass away. But the death benefit can provide a lot of really important living benefits. So for medical emergencies, for chronic illness, where you're not able to do 2 of the 6 activities of daily living, you're in a long-term care facility or receiving at-home health care, for critical illnesses like life-threatening cancer, heart attack, heart disease, or terminal illnesses, you can access your death benefit early to help cover the cost of that care. And many times that money goes to you income tax-free as well, because it's a payment of your death benefit.
Hey, it's super important. And I think, really don't even, on the front end, you're saying, well, there's other benefits too. I think just having it there to ensure your estate, is not destroyed, I think is reason enough. I think it's as simple as that. And knowing that you're actually investing in it and buying it and it's going to be there. versus, renting term. That's by far the thing I'm most passionate about when it comes to these.
Yeah. Yeah. And this last slide is really for you, Jake, the estate planning part of it. I know this is a big piece for you, making sure that you can manage that estate tax for your family, for your children, if something happens to you. We talked about the fact that, especially for real estate investors and business owners, a lot of your assets are illiquid. There's going to be cash needs when you pass away. And you don't want to put your family in a position where they have to liquidate your assets in a fire sale in order to meet those obligations. So this policy can provide much needed cash at the end of your life for the people that you leave behind.
There's enough strain and stress on a family at that point when people go through that. The last thing they need is, start worrying about is how they're going to pay for things. So
exactly.
I know we're about to wrap up, Jake and Kristin. I just wanted to really discuss the philosophy behind, why whole life and why we're passionate about it. It comes down to the 100-year real estate investor. It comes down to that long-term mindset. You had heard Jake say responsibility. Being a responsibility junkie is very, very important when you're talking about that long-term growth mindset. Talking about a person of character, having value-based decision-making is really, really important. And something that one of our mentors talks about, one of the co-founders of the 100-year mindset, Rick Sapio, he talks about leverage, probability, and simplicity. Those are his values. What I want you to do as you're listening, as you're going throughout this entire podcast, think about what your values are. I mean, Jake and I's values and Kristin's values, we're all about the long term. We're all about not making a dollar today. We're about investing that dollar today and letting it grow and having something left over for us. And then on top of that, we want to leave a legacy. I mean, that's one of the reasons why we started Jake and Gino. I mean, students are closing deals. We're helping other families out there. You impact one family, that's a trickle effect. So that's what our values are. So as you're listening to this, think of what your values are. Think of what the 100-year real estate values are, and think to yourself, this is what I want to be part of. I'm not here just to make a transaction today. I really want to think long-term. And when you start thinking long-term, you start putting that simplicity, probability, and leverage into your equation. This will make so much more sense to you. This will make crystal clear sense to you, saying, I'm not buying these policies and expecting to make money in the next 2 or 3 years. This really is something in the next 20 to 30 years that I affect. And I always say to people, whatever we do today is going to affect our children and our grandchildren.
Gino, do you value freedom in your life?
I love it. That's why I'm on this podcast right now, because I choose to be on this podcast with you. Big difference in having to be on, Jake.
Because you mentioned responsibility at the top of that, and one thing I want everyone to get very clear on is that the freest people on this planet are the ones that take on the most responsibility. It's not willy-nilly, freedom's great, I'm going to take it. The freest people in this world are the most responsible. They create their own path. Okay. Freedom is a byproduct of your responsibility. If we're going to live in a free country, we all have to realize that we need to be responsible enough to protect that. And I'm so passionate about that. And I just wish more people would open up their eyes to it. And this is just another component of that when planning for the long term. So, Kristin, thank you so much. Gino, this has been absolutely phenomenal. I really appreciate your time today.
Kristin, how can the listeners get a hold of you?
Yes, yeah, thank you so much. That was a beautiful way to end the presentation, Jake. So to talk to a 100-year real estate investor team member, all you have to do is use your cell phone to scan that QR code. It will take you to a page to book a call, or you can go to 100yearrei.com and schedule a call on that website. Thank you. Thanks for having me.